Okay, so today is Thursday, July 28th. This is our mid-market commentary. As we do every day, we walk through an analysis of our long-term charts and our short-term charts and just kind of see what that market picture is. So long-term for me is starting with a one-year daily chart on each of the three indexes. And we might take a look at one or two of our stocks also here, but I want to start with NDX. Um, if we can have a macro view of what's going on NDX or any of the other indexes, then it helps to, for me, influence which trades I might want to be more aggressive on, which trades I might want to be more conservative on. So here's NDX. This is the one-year daily view. So each bar is a full trading day. And you can see that today we traded up to a new high in our rising set of highs that started back on the 28th of June. We traded up to a high today of 47.19.18. Yesterday, the high was 47.16.07. So we have yet another high. Now, yesterday at the open, we formed a oops pattern. That oops pattern was subsequently retraced later in the day, and we satisfy that oops. So we do have oops patterns. I think we have three oops patterns in this rising pattern. The lowest one is back at the 42.91 level. So in order to satisfy the oops, we need to trade back down to the high of the bar before the gap. And you can have a sequence of oops patterns, and it's important to keep them in mind because it can definitely indicate where the index may move to on the next cycle. In this case, the next cycle would be a down cycle. So it would not be at all out of the question to see NDX trade back down to 42.91 range, which would be a significant move down from where it is. But look at where we were just as recently as the 27th of June. So 1 month ago, we were trading at a low of 41.79, and today we're trading at 47.09 with a high of 47.19. So I've been tracking the resistance. This is the sideways resistance. I'm actually going to do a very, very slight adjustment to it today. I'm going to move it, and I'm going to just nudge it slightly higher to capture the high of today's bar. And again, this is not an exercise in just drawing until I'm happy. This is an exercise in trying to discover where the market is going to naturally form a level of resistance. It's where the market's deciding to take a turn and head in the opposite direction. And sometimes it'll look like the market is starting to do that, but then the market continues to press higher. We need to be patient. We need to just wait until the market indicates to us that in fact it is moving lower before we define ourselves as being in a declining cycle. So my sideways level of resistance based on today's price point is still tied back to resistance back on the 2nd of December. That was a price point that the market decided was a top before it headed lower. And also back on the 4th of November, that's also a point that the market decided there was a natural level of resistance. And you can see how this is almost a perfectly sideways channel, sideways pattern, which I think is huge, Michael. I think it's huge that we're stalling out in this range. Now, when I say stalling, I want to be very clear. We're not stopping yet. We have not yet seen a series of bars that have lower highs, so that has not defined a declining pattern yet. But stalling means we had pretty strong strides to the upside, started to flatten out a little bit, and then in the last several days, we've pretty much flattened out in this range. It doesn't mean we won't creep a bit higher. We could continue to do that, but it tells me that we're starting to see some slowing down of the rising pattern. that should not at all be a surprise to us, because we know that what's going to follow this rising cycle is a declining cycle. How far down that declining cycle takes us is not yet defined. We can apply some historical understanding to where we could possibly go. And one would be by looking at a Fibonacci retracement, where we set a Fibonacci retracement grid in place coming off of the low on the 27th of June and coming off of today's high. A 38% retracement would take us down to about the 4509 level. So let's just say 200 points below where we are. That's a pretty common retracement, a 38% retracement before continuing higher if we do go higher. A 50% retracement is also pretty common. That would take us down to the 44, 47 range. And then a 61% retracement would take us down to about the 43.82 range. So I don't know where we're going to go. I do know that we're going to go lower at some point. We may not start lower for another few days or few weeks, but that's exactly why I go through this exercise each day on each of the three indexes to assess where the market is defining on its own a natural top. Not because I've said that's the top, but where the market's defining that top. And here's the bottom line for me, folks. I want to know what the parameters are. I want to know what the range is that this index is trading in, because as we approach resistance levels, I know that there's an increased probability of a reversal. As we approach support levels, I know that there's an increased probability, with no guarantee, of a reversal. And so that's why I like to have those parameters on my chart. Now, before we jump off of NDX here, let me look at the volatility index on NDX, which is VXN. And you can see here that after we hit a pretty significant low, historical low, can kind of look back on where we have traded in the past and where we're trading now. You can see that we're trading at or near a low. This is a one-year view. If I come off of that natural low back there, you can see how that connects to the current pattern where we've been trading. So we've been trading at a low in terms of volatility. This is an inverse correlation to the index itself, and tells me that with such low volatility, that volatility will eventually spike again to the upside. And when volatility spikes to the upside, it means that typically price is going to fall on the cash index. So let's take a look at SPX. I won't go into quite as much detail, but let's look first of all at where we're trading today. Now, SPX is a little different story than NDX, because on SPX, this is our 7th day of a series of tops that have not been able to break through our long-term resistance. Now, the highest high in that series, let me just confirm this. Yeah, the highest high in that series was back here, 2175.63. 2175.63, and every one of the 6 bars that followed along after it have so far had lower highs than our ultimate all-time SPX high of 2173.63. So that right there shows this stalling effect. We had this strong rise up. We had an oops pattern that formed here. Let's see here. I think we had another oops pattern that formed here. So we jumped higher and higher, then we flattened out for about 4 days. We jumped a little bit higher, and since then, since forming that new all-time high on SPX, not only have we flattened out, but the tops have been slightly lower. Now, the tops have been in a pretty tight range. There's only a couple point difference, really. Well, with today, there's a 7-point difference between the all-time high and today's high. But that's a pretty tight range for SPX. But you can see here how we're just starting to form somewhat of a very minor declining pattern here. That stalling effect right there is going to be one of two things. It's either the index taking a breather before it climbs higher, or it is the point of exhaustion where the index is thinking about forming the next declining cycle. You really have to back up to a 2-year pattern to see where resistance ties back to. Ties back to May of 2015, and you've got all these price points in here that you see that the index moved higher, cycled down, the index moved higher, cycled down, and it's been doing that consistently until every once in a while you're going to have a much more dramatic move lower, or you're going to have a more dramatic move higher. But it is what it is. At the end of the day, all of the activity that has occurred, 100% of the activity that has occurred, and I'll actually go back a little further. All the activity that's occurred since October of 2014 has been inside this range of support and resistance. So for us to be stalling at this level of resistance that was originally defined back in May of 2015, I personally believe is very telling. So the first level of evaluation is the macro view and what our bar charts are telling us. And after this, we're going to jump over to Michael's screens and we're going to take a look at the long-term able trend charts. So RUT is reasonably similar to the other indexes. It's had some continuation of rising bars, but yesterday was a high in this series, and today is a lower high. Yesterday we hit a high of 1222, and today the high has been 1219. Now those numbers are close, but even that small amount of weakness, that small amount of difference between yesterday's high and today's high is starting to show some level of weakness. And more telling for me is when you take yesterday's high and you tie it back to previous natural market highs. One occurred in early November and one occurred in right at the end of November. It tells me that we could potentially be reaching a level of exhaustion. Then again, folks, we could just continue to climb higher. We don't know that yet, but it'll start to become very obvious to us when we break, if we do break above this level of resistance. Because if we break out and we break to the upside, and by connecting that level of resistance to prior price points, it doesn't make sense anymore, the pattern doesn't look reasonable anymore, then we know that we have a breakout more strongly to the upside. And even in that case, we then know where the next potential level of resistance is because we have a rising cycle here that we've identified that sits inside of that sideways channel. So those are the three indexes. Let me just pick on one of our stocks that we track here, and I'm going to talk about Priceline here just for a minute. Priceline is a stock that I have traded quite a bit in the past. And I like this stock because it actually acts many times like an index. The price of the stock gives it, it gives us almost an index-like feel, and the movements on this stock can be very profitable for us. You see all these green bars in here? Those are all oops patterns where there was a abrupt shift in price, either abrupt drop in price or an abrupt rise in price. And some of those oops patterns can end up being very profitable for us. You can see here right now that in the most recent couple of weeks, Priceline has been in mostly a declining pattern. Take a look at the bottoms here, take a look at the top, the most extreme top there after we finished the highest high in the previous rising pattern, and you can see that we're in a declining pattern. Now we're right in the middle of the pattern, and this pattern also happens to be right in the middle of the Bollinger Bands. So this is not an actionable pattern, and it would be rare that I would actually take action in the live trading room based on our bar charts. I'm still going to take action based on my able trend buy and sell signals. But I do like knowing if I'm going to take a signal that there, at least recently, has been more of a bias to the downside than there is to the upside. So we'll pay attention to that. We actually have a position in play right now on Priceline. We have a diagonal spread in play that has an October expiration for the long leg and an August week 1 expiration for the short leg. I love this position we have. It's only a 1 contract trade, but it has a pretty significant profit potential to it. It's got about a 50% return profit potential to it. So that could end up being significant to us. So I'm paying close attention to Priceline. Michael, can we take a look at your Able Trend charts?
Yes, sir. I'll grab it from you. There we go.
I just have to go to screen 1. Let's start with the longest term time period you have on NDX.
Yeah, it'd be the 120 daily here.
All right, so keeping in mind what we just looked at on my bar charts, and keeping in mind that it looks like we may be reaching a level of exhaustion, don't confuse that with a signal to go short. Right now, the long-term 120 daily time period on NDX is double stacked to the upside. That means that the daily support and the 2-hour support are both aligned, and this chart is still showing us that there's bias to the upside. Now, if you go to the next lower time period, the 6180, the 6180 is showing the same thing. We're double stacked to the upside. So far, although we think on the bar chart we may have reached a level of exhaustion, or maybe starting to reach a level of exhaustion, we've got no confirmation of that yet. There's no confirmation. This is not a game, folks, that you want to be impatient. This is not a game where you see something and you want to quickly jump in too early, because you're just going to create more problems for yourself. This is a game where you want to see a situation, in this case, where maybe, possibly, perhaps, we're reaching an area of resistance, but the market has not confirmed that yet. It wakes us up and wants us to pay attention to it, but it's not yet ready for us to take action based on those signals. Then if we go to the next longer time period, that's the 30-90 minute chart, we're double stacked to the upside on 30-90. Now, Michael, go back to, was it 2 days ago on that sell signal that came on?
Yes, right here.
Yeah, tell me how valid that sell signal was.
Well, it's not valid because it printed, but you've got support underneath, so there'd be no trade. That would be the 90-minute support level. So
exactly. So when we saw that, we're starting to think, well, maybe this is the point that we're going to start to see a shift into a down cycle, but we got no confirmation of that. We didn't see the index break below 90-minute support. In fact, it continued to print 90-minute support, and then actually what we call stair-stepped higher. It moved support to a higher level, and it's still double stacked to the upside. So all 3 of those time periods are telling us we're going higher.
yes,
We just don't know how much higher, and one of the things that makes me a little suspect is go back to where the 30-90 minute stair-stepped higher, and
okay,
what have we done since then? We've pretty much flattened out since then. We've traded
yes,
in a relatively tight range for NDX, right?
yeah, 40, yeah, we have about 20, 25, 26 points, something like that.
So that may be an indication to us, but we're not trying to guess at what's going to happen here, folks. We're just looking for the charts to give us a signal. And what I'm giving you is a sequence of evaluation that will give you a pretty clear picture, building from a macro view all the way down to a very short-term intraday view. And so the next view would be our 3-minute, 9-minute chart, which is where we take the majority of our trade signals from. And even right now, you can see that we are stacked to the upside on the 3-9 minute, and we're continuing to climb higher. But we're starting to see periodically a mixture of resistance versus support. You can see there were red dots in there. We went through a brief period here where we actually double stacked to the downside on NDX. But that right there is exactly why we use the 3-9 minute charts to take our trade signals. All the other time periods, including the bar charts, are saying we might still go higher, although we might be reaching a level of exhaustion. The short-term 3-9 minute inside of a rising trending stock, or sorry, rising trending index, presented us an opportunity to take a profit on a downward bias trade. Because intraday, you're going to have up cycles and down cycles. So even though the trend might be higher, which is exactly what NDX is, the cycle may be lower presently. How long did that cycle last from the sell signal that came on?
On the 3-minute mark,
Yes,
this the sell signal or the buy signal? I'm sorry.
the sell signal right there.
Oh, okay. 12:24 to 13:24, so about an hour.
Okay. So for about an hour, we had a downward bias signal, and on that signal bar, Michael, the red bar, the sell signal, we wouldn't have gotten into a put on that bar, but we would have on the next bar because it would have been valid right there.
Yes.
And then if we'd gotten in on that bar, um, we would have had an opportunity to take a profit because the movement looks like it was, what, about 5 points or
It,
so.
it was, yeah. It was right at 5 points.
And so if you're trading a long put, and you have a delta of 50. We had a discussion in the live trading room earlier today about going deep in the money versus going out of the money or at the money. Well, let's just split the difference and say you go at the money and your delta is going to be about 50. It means that you probably could have taken about a $2 to $2.50 profit on that trade. That's a downward bias cycle inside of a upward bias trend.
Yes. Correct.
So I'm a little disappointed. We don't see any weakness yet in the long-term patterns.
Mm-mm. Not on NDX, we don't.
How about, let's jump to RUT next. All right, so let's look at the 120 daily. Look at that. We're double stacked to the upside.
Yes.
The 60 180, we're double stacked to the upside.
Yes.
The 30-90, now we got a sell signal that came on.
Yes.
It was a valid sell signal because the next bar closed red and we have no support below us.
That's right.
So
And,
would you say
and we
that,
got
yeah, go ahead.
we got resistance at 12:20 up there. That's the 30-minute resistance that's printing along there. So
We have resistance printing with no support. So
that's right.
that time period is starting to show us some bias to the downside.
Yes.
It's a little confusing though, can be then because you go to the 3-9 and we're double stacked to the upside.
Yes.
So this is an index that you might want to be cautious about, especially if you want to take a very conservative approach or if you're brand new to this type of trading. Personally, with the level of experience that we have, I wouldn't necessarily mind taking a rising bias position on RUT because of that 3-9 minute. That's a
Right.
good signal.
Yes, it was.
Where would you have gotten into that trade? You have the benefit of
Um,
hindsight, but just in fairness, where would you have gotten?
well, I mean, right, you should have got in right here. I mean, we're 3 bars to the right of the last resistance level, so there's your signal to go in right there at 12:16 and a half.
But wouldn't you have waited until the next bar and confirmed that signal?
Well, not on a signal bar. You don't have to wait the next bar.
Okay. I'm just thinking of a very conservative approach,
Well, conservative, yeah, you could wait, yes, but
but it would have
yes,
played out either way, right?
yes, it would have.
Okay. What about SPX?
It's
Now
going to
this,
look different. Mhm.
yeah,
There we go.
there's a different picture on the 120 daily on SPX.
Yes,
We've got 2 hour resistance printing and we have daily support printing. So we're in a very tight range between, what is it, about a 24 point range? 20, no, I guess
2177. Yeah, about 18.
18 point range. Yeah.
Yeah, somewhere in there.
So we're starting to see some weakness there. And then when you look at the 60, 180, there is no support. We're actually double stacked to the downside on SPX. And
Yes, we are.
and then on the 3090, we're double stacked to the downside.
Yes,
And then this is funny, on the 3.9, we actually are double stacked to the upside. So that would tell me that we're starting to weaken and starting to trend lower on SPX. But what we're in right now is a rising cycle within that lower trend.
yes,
So I hope that's helpful, folks, in terms of going through and reading and interpreting your charts. And when in doubt, stay out. If you don't see the picture clearly, then give yourself time to learn and get comfortable with it. Spend time with us in the live trading room and understand how we read these signals. We do offer the Profit Accelerator 4 module webinar segment that teaches you how to read these signals, and then we reinforce it every day, all day long in the live trading room. Michael's here going through the charts on a regular basis throughout the day. But if you're not comfortable, then don't get into a trade. If you start to see the pattern very, very clearly, then definitely jump into a trade when you feel it's appropriate. Now, can we just show Priceline?
yes.
All right, so I'm going to start on the right because you've got the 120 daily.
Hmm.
And what I see is that Priceline is stuck between support and resistance.
Yes.
We've got daily support, we've got 2 hour resistance.
Hmm.
And what is the difference between those two?
1325 to 1312, so
13 points.
13 points.
So I got a 13 point range. Now the cool thing is that trading the way we trade, a 13 point movement is plenty for us to grab a profit.
Yes.
But I'm not saying that you want to get into a trade right there. First of all, the bar is green. We're trading right at resistance. If the next bar turned red, might consider that. Might want to wait until the bar closes red. But we don't take our trade signals typically off of the 120 daily anyway. We're taking them off of the 3.9 or the 5.15. Then the
Yes.
30-90 minute, um, up until the current bar was actually double stacked to the downside.
Yes, it was.
But now we've printed a 90-minute support.
Correct. 1311.
So that's interesting. I'm not quite sure what to do with that, which means I'm not going to do anything with it. I already have a Priceline trade in play, so I'm not looking for a new Priceline trade. So that makes it a little easier for me to not make a decision there. And then we have the 515. Now on the indexes, we were talking about 3 minute, 9 minute time periods. And when I say 3.9, I mean a chart where we are comparing both the 3 minute and the 9 minute together. On the 515, we're comparing the 5 minute bars to the 15 minute bars together. It's all consolidated into one chart. The bar itself is a 5 minute bar, but the resistance and support that prints is going to be both 5 and 15. So on
Yes.
indexes, we use 3.9, and on stocks, we use 5.15. So what are we seeing there? We broke above
Yeah, it broke above the resistance at 1321, and that's valid now. It's broke above, well, not really, to be honest with you. So because it's not going to print more likely, but you need to wait 3 bars to the right of the last resistance level because they're 15-minute resistance levels, and the price is 5 minutes, so 3 times 5 is 15 to
So
make sure it don't print again. But I don't think it will.
yeah, you're speculating it's not going to print, but we won't know for sure until we get to that bar.
That's right.
And Michael's speculating that because he has a lot of experience with the charts. I mean, he is immersed in these charts every single day, but that doesn't guarantee he's correct on that. And we usually wait for the signal to confirm that.
Right. Correct.
Um, and like I said, I already have a position on Priceline, so I'm not looking for a new one. So I don't need to wade through that pattern and try to figure out should I take a position or not. And the other thing is, if I start feeling as though I'm doing that, um, I just go look at something else. I want the low hanging fruit. I want the patterns that look very obvious to me, and I'm not
Yes.
guessing at.
No.
I see you have ISRG there also. We didn't look at the bar chart on ISRG, but let's take a look at that before we conclude here.
Let me clean that up a little bit, Mark. Let me fix that really quick, and then
Yeah, we're
okay, now it's in order.
we're um, we're all over the place on that. Um,
Yeah.
although on the 120 daily, we're trading below daily support. But we were doing that yesterday and the day before and the day before and the day before, but we've continued to print support.
Yes.
So I'm just going to set that aside for a minute. The 30-minute, 90-minute, we looks like we printed a buy signal,
Yes.
but we wouldn't take that signal because we need to wait. When that signal came on, we needed to wait and see if resistance was going to print.
Yes.
It did print, so that's stay on the sidelines signal. And it looks like 30-minute resistance is quit printing. So that's kind of a hodgepodge of
It is.
signals right there.
Yes.
Uh, and then it looks like on our 515, we're actually double stacked to the upside.
Yes. Even though it's broke through here, but we'll have to wait and see. But yeah,
Right.
but I wouldn't go short there by no means. Signal.
So you tell me if you see it differently, Michael, but of the charts that we looked at, the three indexes and the two stocks, there's really no clear signal right now other than the index is 3.9, which are double stacked to the upside.
Yes, that's correct.
So if you're looking for a trade, it might be a sweet spot trade on the 3.9 on one of the indexes. Um, and that happens to align with the long-term time periods on NDX and RUT, not necessarily on SPX. But that's how we evaluate these. And then once you've done your evaluation, you need to decide where you're going to place a trade, if you're going to place a trade, and always start every single trade. The very first decision you need to make on every single trade is how much capital am I willing to risk? It's not what strike I'm going to trade. It's not what expiration I'm going to trade. It's not what trade Michael did or what trade Mark did. It's how much capital am I personally willing to risk? And then I'm going to choose a strike and expiration that aligns to my risk tolerance. You want to make sure that you always, always, first of all, manage your risk. Don't be afraid, folks, that you're going to miss an opportunity. Don't look back and say, I wish I would have gotten into that, although we both do that. But
Oh yeah.
don't look back and wish you would have done something different because you made the best decision you could at the time. And just know and trust that there are always going to be additional opportunities. If you missed
Yes,
one, just wait and another one will come along.
it will.
Any other thoughts, Michael?
No, we're lining up for a sweet spot trade on the NDX here. Looks like on both indexes. I mean, on both charts, the 3 and the 5 here. So
Sure looks like it.
Yeah, it does. Even on India, ASPX2 and the Russell, not so much because we got that Russell's got resistance here. But
Yeah, the 515 is contradicting the 3.9 on Russell, but SPX and NDX look like they're setting up nicely.
yeah, they do.
All right. Well, why don't we stop talking and maybe go look for a trade?
That sounds good to me.
All right. Thanks, Michael. And thanks, everyone, for being part of our live trading room. You make our day a lot more enjoyable just by being here and chatting with us and sharing what your thoughts are and what you're learning and how much money you're making, and makes it a lot more fun for us. We'll be back again tomorrow. Thanks.